Sir, very happy morning to all. Sir, we are going to do the workbook of assessment procedure. We are having selected questions from preparatory work by AO, self-assessment under section 139, PAN and other provision, summary assessment under 143 subsection 1, scrutiny assessment under 143 subsection 3, best judgment assessment under section 144, income escaping assessment under section 147, power of income tax authorities, search and seizure, protective assessment or accelerated assessment, time limit for completion of assessment, appeals and revision, rectification proceeding, advance ruling, dispute resolution, penalty under section 270, penalties under section 271 and 272, prosecution proceedings, liability in special cases, miscellaneous provision. And the, sir, 5 chapters which I told: equalization levy, application and interpretation of tax treaties, base erosion and profit shifting, overview of model tax conventions, and tax planning. So these are the area not related to assessment procedure, but related to, sir, non-resident theory part. So today we are starting with the workbook discussion of assessment procedure. In that part number 1, preparatory work by AO. So this is a compilation of ICA question, past examination question, important topic from the theory part of assessment procedure. Illustration number 1. The AO, within the power vested in him under 142 subsection 2A. What is 142 subsection 2A? Special audit. While examining the accounts of PNF Limited, had ordered to get the same audited. Company challenged this order on the ground that opportunity was not provided to them by the AO prior to passing of such order. Decide the correctness of the action of the AO. என்ன கேக்குறாங்கன்னா, assessing officer ஒருத்தங்களோட books of accounts பார்த்துட்டு போயிட்டு ஸ்பெஷல் ஆடிட் பண்ணிட்டு வான்னு சொன்னாங்க. அசஸி என்ன சொல்றாங்கன்னா, அப்படி ஒரு ஆர்டர் பாஸ் பண்றதுக்கு முன்னாடி எங்களுக்கு என்னவே தரல, ஆப்பர்ச்சுனிட்டி ஆஃப் பீயிங் ஹர்டே தரல. அப்படி ஆப்பர்ச்சுனிட்டி ஆஃப் பீயிங் ஹர்ட் தராம 142(2A பாஸ் பண்ணாங்கன்னா, is it a valid 142(2A is the question. It is mandatory that before issuing for special audit under section 142(2A, sir, what has to be provided? Opportunity of being heard has to be provided. So as per the proviso to section 142 subsection 2A, AO shall not direct the assessee to get the books of accounts audited unless the assessee has given a reasonable opportunity of being heard. Therefore, in this case, order of AO is not valid since the assessee was not given an opportunity of being heard prior to passing such order. So question number 1 out of 10, what makes us understand is before issuing a special audit under section 142(2A, opportunity of being heard is mandatory. I'm moving to illustration number 2. Like this, in this slot, we'll be doing 10 questions. Sir, these are also ICA question, my dear lovable students. For facilitating expeditious resolution of dispute relating to international transaction involving transfer price and foreign company, Income Tax Act has provided for alternate dispute resolution mechanism. Basically, they are talking about DRP. What is DRP? Dispute Resolution Panel. In this context, you are required to answer the following. The 3 questions has been asked. What meaning have been assigned to DRP and the eligible assessee under the mechanism? DRP na enna? DRP ki yaar polam? Number 2. When can a grievance for resolution be filed by an assessee? எப்போ assessee DRP ல grievance என்ன பண்ணலாம்? File பண்ணலாம். What evidence are being considered by panel to redress the grievance of the assessee? அவங்களோட கருத்து சொல்றதுக்கு முன்னாடி என்னென்ன விஷயங்கள் பாப்பாங்க இப்படிங்கறத question. So this is the answer. The DRP has been defined to mean a collegium comprising of 3 principal commissioner or commissioners of income tax. அப்ப DRP ங்கிறது 3 principal commissioners சேர்ந்த ஒரு body. 3 principal commissioner or commissioners of income tax constituted by the board for this purpose. இதை வந்து CBDT constitute பண்ணிருக்காங்க. The term eligible assessee means any person in whose case the variation referred to in section 144C subsection 1 arises as a consequence of the order of the TPO passed under 92CA subsection 3 and any foreign company. This has to be interpreted. Sir, foreign company பொறுத்த வரைக்கும் every foreign company can go to DRP. Every foreign company can go to DRP. Others can go to DRP only if the variation arises because of an order passed by TPO. மிச்சவங்க டிஆர்பிக்கு போகணும்னா சார் டிபிஓ பாஸ் பண்ண ஆர்டர்ல டிஃபரன்ஸ் இருந்தா மட்டும்தான் டிஆர்பிக்கு போக முடியும். ஆனா ஃபாரின் கம்பெனிக்கு அப்படி இல்லை. ஃபாரின் கம்பெனி கேன் கோ டு டிஆர்பி ஈவன் இஃப் தேர் இஸ் நோ வேரியேஷன். லுக் அட் த ரீடிங். The term eligible assessee means any person in whose case variation referred to in 144C subsection 1 arises as a consequence of order of TPO passed under 92CA subsection 3 and any company foreign. And any foreign company means foreign company is a separate what? Separate person. அவங்க எப்ப வேணா டிஆர்பிக்கு போலாம். ஆனா மிச்சவங்க டிஆர்பிக்கு போனோம்னா ஒரு ரெசிடென்ட் டிஆர்பிக்கு போனோம்னா அவங்களுக்கு டிபிஓ பாஸ் பண்ற ஆர்டர்ல என்ன வேணும்? AO shall forward a draft of the proposed order of assessment. Eligible assessee shall within 30 days of receipt of the order file his objection to such variation with the DRP and the AO. So before finalizing the assessment order, AO will pass a draft order. For that draft order, my dear lovable students, sir, the assessee, if he is not liking, can go and knock the doors of the DRP within. The DRP shall, in a case where any objections are received, take into consideration the N order, draft order, objection filed by the assessee, evidence furnished by the assessee, report if any of the AO, VO, TPO or any other authority, records relating to the draft order, evidence collected by or cost to be collected by or result of any inquiry made by or cost to be made by it. So after considering this many items, DRP will pass their final order. That's what the process of DRP. With this question number what? 2 out of the slot number 1 comes to an end. I'm moving to the third question out of our 10 question. This is a past examination November 14 question. Discuss the correctness of following statement in the context of provisions of Income Tax Act. The Joint Commissioner of Income Tax is empowered to issue directions to the AO as he thinks fit for guidance of AO during the assessment proceedings to complete the assessment in a specific manner. Is the Joint Commissioner having power? Yes, sir. As for what section? 142A or 144A. Which section? 144A. Correct. Join means joined over, no? Another 44. 144A. Correct. One more question is that AO may direct for the audit of accounts under 142(2)A of the Act during the assessment proceedings on the basis of certain grounds. Yes, sir. There are various circumstances are there on which what will be ordered. First one, the statement is correct. Sir, as per section 144A, a joint commissioner may, on his own motion, or a reference being made to him by the AO, or an application of an assessee, call for and examine the record of any proceeding in which NA is pending. Having regard to the nature of the case or amount involved or for any other reason, if he consider it necessary or expedient, he may issue such direction as he thinks fit for the guidance of the AO during the assessment proceeding to complete the assessment in a manner. Such direction shall be binding on the AO. And coming to the second one, is AO is having the power to issue for special audit under 142(2)A? The statement is correct. Section 142(2)A expressly include within its scope the following reasons on the basis of which AO may direct what audit of accounts of an assessee with the previous approval of the commissioner or chief commissioner. What are the, sir, grounds? Complexity involved in the accounts, volume of the accounts, doubt about the correctness of the accounts. Sir, multiplicity of transactions in the accounts, specialized nature of the business activity of the assessee, and it is in the interest of revenue to get the special audit done. With that, we are through with that question, and that proprietary works by AO chapter comes to an end. I'm moving or continuing. Sir, I'm going to talk about self-assessment under section 139. This is fourth question out of 10 questions. This is an ICA question. Srimati Kandi engaged in the business of growing, curing, roasting and grounding of coffee. After mixing chicory, had a total income of 6 lakh. From this business, which was her only source of income during the year ended 31/3/2023. We know rule number 7A, rule number 7B and rule number 8. We know that coffee, two types of coffee are there, normal coffee and abnormal coffee. Normal coffee is how much? 60/40 is for normal coffee, yeah. 65/35, yeah. What is the rate for normal coffee? 75/25 is for what coffee? Normal coffee. So what is for abnormal coffee? 60/40. Because in abnormal coffee, the commercial level will be very high. Because they will be doing growing, curing, roasting, grounding, boosting, Horlicks, all these things they will be doing. That's why it is called as abnormal coffee. For abnormal coffee, the business portion is more. That is why in a 40% is business income. Whereas in 75/25, normal coffee, sir, agricultural element is more, only 25% is business. So, if you split this 6 lakhs into 2, being in a coffee, abnormal coffee, 6 lakhs into etana percent? 40% comes to. So, 2,40,000 is the business income, which is less than basic exemption limit of 2,50,000. Are you able to appreciate how to link it? Yes, sir. She consult you to have an opinion whether she is required to file return of income for assessment year 23/24 as per provisions of 139 subsection 1. Would your answer change if he had traveled to USA during the previous year 22/23 and incurred 2.2 lakhs for the same? Yes, if the foreign travel is more than 2 lakhs. Brilliant question. This is an ICA question. The clarification regarding filing of return of income by coffee growers being individual covered by rule 7B of income tax rules is given in circular dating something or something. According to the circular, an individual deriving income from growing, curing, roasting and grounding of coffee with or without mixing chicory would not be required to file the return of income if the aggregate of 40% of his or her income from growing, curing, roasting and grounding of coffee with or without mixing chicory and income from all other sources liable to tax in accordance with the provisions of this act is equal to or less than the basic exemption limit prescribed in the first schedule of the Finance Act of the relevant year. In this case, Srimati Kandi has total income of 1 lakh from his business, which was only source of her income for previous year 22/23. 40% of her total income works out to how much? Which is less than basic exemption limit of rupees in respect of an individual assessee. Therefore, Srimati Kanti is not required to file return of income for assessment year 23/24 as per the provisions of section 139. Sir, if Srimati Kanti had travelled to Engeki during the previous year 22/23 and incurred 2.2 lakhs on such travel, she would be required to mandatory file a return of income for assessment year 23/24 or not before the due date under section 139 subsection 1, even though her total income does not exceed basic exemption. She has to compulsory liable to file the return of income. Shall we move into the question number 5, which is a past examination May 2011 question. This is 5th question out of 10th question. State whether the following assessee have to file return of income, and if so, the due date for assessment year 23/24. A public charitable trust registered under the Act running an educational institution with aggregate annual receipts of 2 crore and total income of rupees 3,20,000. Is the accounts of the trust, sir, liable for audit under section 44AB of the Act? Question number 1. A registered trade union having income from let out property rupees 1 lakh. Question number 3. A public trust hospital having an aggregate annual receipt of 200 lakhs and availing exemption under section 1023C clause 6A with the total income of 1,10,000. So 3 people has been given and they are asking whether they are liable to file the return of income under section 139. This is a May 2011 question. So the requirement to file the return of income in respect of following assessees are as under. As per section 139 subsection 4A. What is 139 subsection 4A? Which is applicable to religious or charitable trust of the Income Tax Act. If the total income of the charitable or religious trust or institution before exemption under section 11 and 12, அது 11 and 12 ஓட exemption claim பண்றதுக்கு முன்னாடி basically income derived from property held under trust, அத வார்த்தை, because that's what is our income before claiming exemption under section. So income derived from property held under trust exceeds the maximum amount not chargeable to tax. அது basic exemption limit விட என்ன ஆவறதா இருந்தா exceed ஆவறதா இருந்தா then the trust or institution is under an obligation to furnish the return of income within the time allowed under section, and all provisions of Income Tax Act shall apply as if it were a return furnished under section. Therefore, in the present case, charitable trust is required to file the return of income under section 139(4)(a). The due date for filing the return of income is 31st October, sir, of the assessment year, because they are claiming exemption under section 11 and 12. In order to claim exemption under section 11 and 12, audit is mandatory. Yes or no? So the accounts of the trust are liable to be audited as per requirement of what and what. However, tax audit under 44AB is not required since a trust is not carrying any business or profession. Audit is mandatory, sir. Tax audit is not required. Are you all really with me? So I'm reading that question part once again. A public charitable trust registered under the Act running an education institution with aggregate annual receipts of 1 crore and total income of 3,20,000. That 3,20,000 exceeded the basic exemption. So before claiming 11 and 12, if the income exceed basic exemption limit, every charitable trust is liable to file their return of income under section 139 subsection 4A. And is the accounts of the trust liable for audit under section 44AB of the Act? No, sir. Sir, அவங்க என்ன சார் business or profession என்ன சார் undergo பண்ணாதனால 44AB ல audit பண்ண வேண்டிய அவசியம் இல்லை. I'm moving to the next one. Sir, as per section 139 4C, what is 4C? Various association. Those who are claiming their exemption under section 10. Those who are claiming their exemption under section 10. Every specified institute shall, if the total income without giving effect to the provisions of section 10 exceeds the maximum amount which is not chargeable to income tax, furnish a return of such income of the previous year in the prescribed form and verified in the prescribed manner and setting forth such other particulars as may be prescribed, and all the provisions of the Act shall for as may be applied as if it were a return required to be furnished under 139 subsection 1. That means if you are a specified institute covered under section 139 4C, 139 4C ல cover ஆனவங்க section 10 ல தான் exemption claim பண்ணுவாங்க. For example, we are having securitization trust. Yeah. Every income of securitization trust is fully exempted in the hands of securitization trust under section 1023 DA. And we are having mutual fund. Sir, 1023D. These guys are covered under section 10. These guys income exceed the basic exemption limit. They are liable to file the return of income under 139(4)(c). 139. So 139(4)(c) are specified institutions who are claiming exemption under section 10. So without claiming exemption under section 10, if their income exceed basic exemption limit, then they are liable to file the return of income under section 139(4)(c). So the threshold under 139(4)(a) is exemption under section 11 and 12. Without claiming exemption under section 11 and 12, if your income exceed basic exemption limit, you are liable to file the return of income under section 139(4)(a). 139(4)(c) பொறுத்த வரைக்கும் without claiming exemption under section 10, if your income exceed basic exemption limit, you are liable to file the return of income. Therefore, in the present case, trade union is not required to file the return of income since his total income before exemption under section 1023C does not exceed how much rupees, man? 2,50,000. So, trade union அவங்களோட respective sectionல sir income less than basic exemption limit இருந்ததுனால they are not liable to file the return of income. I'm moving to the third part. So, I'm reading the second part question for your connectivity. Sir, a registered trade union, sir, having income from let out property of how much lakh? 1 lakh, which is less than basic exemption limit. So, no need to file the return of it. A public trust hospital having an aggregate annual receipts of ethanol lakh and availing exemption under 1023C clause 6A with a total income of how much? 1,10,000. Sir, as per section 139(4)(c), and 4C, because they are going to claim the exemption under section 10, every specified institute shall, if the total income without giving effect to provisions of section 10 exceeds the maximum amount which is not chargeable to income tax, furnish a return of such income of the previous year in the prescribed form and verified in the prescribed manner and setting forth such other particulars as may be prescribed. And all the provisions of this act shall, as far as may be, apply as if it were a return required to be furnished under 139 subsection 1. Therefore, in the present case, public trust hospital is required to file the return of income as his income exceeds NSR basic exemption limit. எவ்வளவு வருது income? 200 lakhs was the inner receipts, gross receipts. Total income எவ்வளவுதான் இருக்கு? 1,10,000 தான் இருக்கு இல்லையா? Yes, sir. Since the audit is compulsory as a public trust hospital is claiming exemption under section 10, therefore due date for filing the return of income is 31st October of the assessment year. We'll make this figure as, sir, total income as 3,10,000, which is more than 2,50,000. Then only it will match with the answer. Are you ready with me? Yes, sir. We have done, sir, up to question number 5 out of 10 questions. I am coming to the 6th question. And AO issued a notice under section 142 subsection 1. Under 142(1) we are having various notices. 142 subsection 1 clause 1, 142 subsection 1, 142 subsection 1. On the assessee on 24th December 2023, calling upon him to file return of income for assessment year 23-24. So, what is our financial year? 22-23. For financial year 22-23, sir, assessment year 23-24. Correct? Sir, 22-23 ஓட ரிட்டர்ன் ஃபைல் பண்றதுக்கான belated return ஃபைல் பண்றதுக்கான 139 subsection 4 டைம் லிமிட் எது வரைக்கும் இருக்குன்னா 31st of December வரைக்கும் இருக்கு. When the AO has issued the notice 24th December 2023, அப்போ 139 subsection 4 டைம் லிமிட் முடியறதுக்கு முன்னாடியே என்ன அமைச்சிருக்காரு? நோட்டீஸ் அமைச்சிருக்காரு. 139 subsection 1 டைம் லிமிட் முடிஞ்சாலே நோட்டீஸ் அனுப்பலாம். Yes, sir. Sir, in response to the said notice, assessee furnished a return of loss. Sir, இந்த நோட்டீஸ் வரும்போது ரிட்டர்ன் belated return ஆயிடுச்சு. அந்த belated returnக்கு ரெஸ்பாண்ட் பண்ணியிருக்காரு, லாஸ் ரிட்டர்ன் furnish பண்ணியிருக்காரு. And claimed carry forward of என்ன loss? Business loss and unabsorbed depreciation. தவறான செயல். எதை கேரி ஃபார்வர்ட் பண்ணலாம்? Unabsorbed depreciation. எதை கேரி ஃபார்வர்ட் பண்ண முடியாது? State whether the assessee would be entitled to carry forward the loss as claimed in the return is the question. Sir, as per the provisions of 139 subsection 3, what is 139 subsection 3? Loss return. We are having any loss sustained under section 72, 73, 73A, 74 and 74A. Correct? Any person who has sustained loss under the head profits and gains of business or profession is allowed to carry forward such a loss under section 72, 73 only if he has filed the return of loss within the time allowed under section 139 subsection 1. அப்போ 139 subsection 1 time limitல return file பண்ணா மட்டும்தான் இந்த 5 loss என்ன பண்ண முடியும். Also the provisions of section 80 specify that a loss which has not been determined as per return filed under 139 subsection 3 shall not be allowed to be carried forward and set off inter alia under section 72 subsection 1. இது இல்லாம section 80யும் என்ன சொல்லுதுன்னா, உங்களுக்கு லாஸ் கேரி ஃபார்வர்ட் பண்ணணும்னா நீங்க 139 subsection 3 டைம் லிமிட்டுக்குள்ள என்ன பண்ணியாகணும்? ரிட்டர்ன் ஃபைல். Further, there is no such condition for carry forward of unabsorbed depreciation under section N2. அந்த மாதிரி ஒரு கண்டிஷன் 32 இல்ல, because only 5 செக்ஷன் அதான் செக்ஷன் 80 லிஸ்ட் பண்ணிருக்காங்க. Therefore, in the present case, assessee cannot carry forward the business loss but can carry forward the unabsorbed depreciation. I hope that you are able to appreciate or understand. I'm moving to the 7th question out of our 10 question. It's a past examination question, May 2007 and November 2008. Same question has been asked. Discuss the correctness or otherwise of the following proposition in the context of Income Tax Act. A fresh claim before the AO can be made only by filing a revised return and not otherwise. I will tell you what is the meaning of this statement. You filed a return of income under any subsection of section 139, but you forgot to claim chapter 6A deduction. Now your case is pending before AO either under 143(3) or 144 or 147, and you are saying that, sir, I have forgot to claim chapter 6A deduction. When you pass the assessment order, please, sir, allow me chapter 6A and pass the assessment order. Like this, a letter in your letterhead you are giving to the AO while the assessment is going on. That letterhead has to be put it on dustbin. If you want to claim anything before AO, assessing officer, it can be claimed only by filing a return. But the same issue is there before CIT appeal, ITAT, High Court, Supreme Court. You can claim additional thing even without filing the return of income. அப்ப ஏவோ முன்னாடி என்ன claim பண்ணனும்னாலும் filing, sir, return is same question in a different angle. Or an individual filed his return of income for assessment year 23-24 on 31/7/2023. Correct due date la file பண்ணிருக்கார். He later discovered that he has not claimed deduction under ATC in the said return. He claimed the said deduction through a letter addressed to the AO. The assessing officer completed the assessment without allowing the deduction claimed by R. Is there yes. Is there, sir, AO justified in doing so? Yes, sir, AO is justified because, sir, anything if you want to claim before the AO, you have to claim only by filing the. Sir, in case of this case law, please take it in your heart. Godse India Limited, because, sir, this is a Supreme Court judgment. Godse India Limited. Tell me what is the case law? The Supreme Court held that claim can be made before the AO in the assessment proceedings only through a revised return and not through a letter. So what is the one line summary? If you want to claim anything before the AO, you have to file. Therefore, if deduction has not been claimed in the return and assessee want to claim the said deduction in the assessment proceedings, then he can do so only by filing a revised return. The AO cannot entertain such claim made by assessee through a letter. ஒரு லெட்டர்னால சார் என்ன பண்ண முடியாதுன்னா கிளைம் பண்ண முடியாது. நீங்க ஏஓக்கு முன்னாடி என்ன கிளைம் பண்ணணும்னாலும் மேண்டேட்டரியா return of income தான் ஃபைல் பண்ணணும். So we have done with that. I'm moving into question number 8. This is an ICAI question. 8 by 10 is a target. Mr. A, aged 55 years, furnishes the following particulars for the year ended 31/3/2023. Income from business, how much? 2 lakh. Income from other sources. Gross sales turnover, etana crore, which is more than 1 crore. Correct. Tax audit under section 44. Chapter 6A deduction 1 lakh. LTCG on listed share 50,000, which is less than 1 lakh. Because in excess of 1 lakh, it will be taxable at 10%. Examine whether Mr. A should file enough income for assessment year 23-24. Would your answer differ if the status of assessee is company, sir, instead of Mr. A? Every partnership firm and company has to compulsory liable to file the return of income irrespective of the income of loss. Okay? So, we have to calculate the gross total income. Yeah. Income from business comes to how much? 2,80,000. Income from other sources. So, 2,80,000 plus 20, 3 lakh. Sir, plus LTCG will not form part of total income at all. Because up to 1 lakh, it is NSR exempted. Correct? So, minus chapter 6A, 1 lakh. So, 3 lakh minus 1 lakh, total income is how much lakh? To file the return of income, will you see the total income or gross total income? Gross total income. Without giving exemption to NS6A. Chapter 6A, we have to check. Shall we? The gross total income of Mr. A is 3 lakh, comprising of income from business and other sources. We have already calculated gross total income. Yeah. Since the long-term capital gain does not exceed rupees how much lakh, it is fully exempt under section 112A. After availing NS6A, the taxable income for assessment year 23-24 is 2 lakh, which is below the maximum amount not chargeable to tax in the hands of individual. According to section 139 subsection 1, in case of an assessee other than Yare and Yar, because every firm and company is compulsory liable to file, when the total income before availing deduction under NS6A exceeds the maximum amount not chargeable to tax, that is how much? The return of income shall be mandatorily filed irrespective of the amount of any income. Therefore, Mr. A shall file his return of income as per section 139 subsection 1. In case status of the assessee is a company, sir, irrespective of its income or loss or turnover, return of income shall be filed mandatorily as per section 139 subsection 1. So, as per section 139 subsection 1, whether we have to file the return of income or not depends upon, sir, the gross total income. If the gross total income exceeds basic exemption limit, then we are liable to file the return of income. And moving to the 9th question out of our slot number 110 question. This is also an ICAI question. Mr. Y furnishes the following particulars for the year ended 31/3/2023. Income from business 2,50,000, that is PGB. Income from other source 25,000, that comes to 2 lakh. Gross sales turnover is 25 lakh. Brought forward business loss eligible for set off is how much? 2 lakh. So 2 lakh 50 plus 25, 2 lakh 75,000 minus, sir, how much lakh? 2 lakhs comes to 75. This is the gross total income. Correct? Because we will not set off after the gross total income. We will be set off while computing the 5 heads of income itself. Examine whether Y should file the return of income for assessment year 23-24. Sir, gross total income means aggregate of any income, taxable income under ethna heads of income, less brought forward business loss eligible for set off, but before deduction under NS6A. This is the definition of gross total income. Accordingly, in the given case, gross total income of Mr. Y is only how much? after set off of loss as the total income before claiming deduction has not exceeded the maximum amount not chargeable to tax. Filing return of income is not warranted as per the provisions of 139 subsection 1 for assessment year 23-24. அவங்க return of income file பண்ண வேண்டிய அவசியம் இல்லை. ஆனா இந்த வருஷம் ஏதாவது லாஸ் வந்து அதை கேரி ஃபார்வர்ட் பண்ணணும்னா return of income file பண்ணுங்க. I'm moving to the last question in our slot number 1, which is 10 by 10. JKL Limited filed its return of loss for assessment year 23-24 on 10/1/2020 beyond the time prescribed under 139 subsection 3. What is 139(3)? Declaring a total loss of 15 lakh. It approached you for advice regarding the course of action to be taken to secure the benefit of carry forward of business loss for set off against future profit. Since they are filing the return of income beyond 139 subsection 3 time limit, there is no option to carry forward the loss, business loss. But they can knock the doors of CBDT. But they can knock the doors of principal commissioner. They can knock the doors of higher authorities based upon the amount of loss. If they are able to, sir, satisfy they were not able to file the return of income because of sufficient reason, genuine hardship can be condoned. Are you really with me? So I am, sir, coming to the, sir, answer. Advise a company suitably in this matter. Why circular number something but something? Sir, it has been decided to condone the delay. It is decided to what? Condone the delay in filing the return having claim of carry forward of loss. If a return having a claim of carry forward of loss is filed late, then the delay in filing of loss return in case of genuine hardship can be condoned by CIT if the return loss is up to how much lakh? 10 lakh. Chief CIT if the return loss exceeds 10 lakh but it is up to 50 lakhs. 50 lakhs. CBDT if the return loss exceeds 10 lakh. 50. In the present question, in view of aforesaid provision, X Limited should apply to the Chief CIT which can condone the delay in filing the loss return and allow the carry forward of loss. With this, we are through with our slot number 1, which is 10 by